All right, I believe we are live. All right.
All right.
What's going on, folks? Ontarian Hawkins here, the Passive Income Guru. We have a special treat for you this afternoon, and in Reggie's time this morning. He's in Hawaii. We're going to be discussing something that a lot of you, I know, is going to be interested in. It's going to be dealing with passive income, but it's going to be in a different space, a different skill, so to speak, which is Forex trading. Okay. Now, a lot of you have been, if you've been subscribed to my channel, you've been seeing my videos about Forex, my Forex journey, different tools that I use, different courses that I have in place. And all of this, I have all this in place to do one thing, and that's to master the skill so that I can teach others to do the same thing. However, there is a specific tool we're going to talk about today, no matter if you're a beginner, intermediate, or advanced trader, that's going to give you some very high probability trades, okay? Very, very high probability trades. But before we get into it, I want to introduce two of my good friends, Micah, Micah's from Hawaii, but he lives in Virginia, and Reggie, who is in Hawaii, from Hawaii. And I want to, introduce these guys to you. And first, start with you, Micah. Tell everybody a little bit about yourself, your background, and what brought you to Forex trading.
Hey everyone. I've been online, for a while now. And I came to Forex basically because it's passive income. I don't need to bother nobody. All it is my charts, and I just get Ontarian's videos to make money, print money. You can just do it right from your computer without bothering nobody at all. And I got started about a year and a half ago, maybe. About a year and a half ago. It's been a journey. But I'm grateful for this journey because it gives people hope, to learn a skill set that can initially pay them for the rest of their life. So that's why I got into Forex. I'm a father of four. So I teach my children. They get on with me during the day, sometimes at night, and they start training as well. Teach them young.
Well, that's great, man. I mean, to have what's your children's age?
My oldest is 15. My youngest is 8.
Wow. So this thing with, if they actually focus and learn the skill of trading, I'm pretty sure you're going to teach them how they're going to be later on in life. That's going to be, that would be a blessing. It's going to be a blessing for sure. So a lot of youngins out there doing really well in Forex. So thanks for that introduction, Micah. And Reggie, glad to have you on as well, my friend. Tell everybody about yourself, man, and your background and what brought you to Forex trading.
Absolutely, Ontarian. Good morning, good afternoon, everybody. Well, my name is Reggie. I was born and raised from Hawaii, and I ran across Forex trading with Micah just about a year now. So I guess we've both been in the industry just as long as about the same time. And what really captivated me is the growing technology and what we can do and what we have access to wasn't available 15, 20 years ago, And so I'm constantly reminded from my folks and from people that I respect that, hey, you folks have got everything on here, Why not utilize what your access? Because if I was there, I'm speaking in from their perspective. They tell me if I was your age and if we had this kind of technology back then, best believe things would be a whole lot different for us, for you probably. And so I feel like I'm not only obligated, but I'm blessed to have access to Forex trading, the kind of marketing that we do, and just being able to connect with people that we weren't able to connect with like this 20 years ago, and Forex being one of them. 15, 20 years ago, you had to have a pretty significant account in order to trade Forex or any kind of stock market. And now we've got penny stocks, we've got, so many different ways to trade. And I just saw this as an opportunity for me, being that opportunity here in Hawaii is so limited, but I'm able to access and trade on my phone. And being the father of two now, my oldest has just turned 3, and my youngest is just turned a month. I like to start early, and I'd really want to spend as much time with them as possible. And I believe Forex gives me an opportunity to spend more time at home, and that's why I'm on this mission with you, Ontarian, and Micah, to help really educate those around us and really uplift them and give them a different kind of opportunity that's available, that wasn't available 15, 20 years ago. So that's my mission.
All right, man. So your why is what drives you. I see, your family and everything, and it's not just about making money. Forex is a skill that everybody can learn, but in the end, it comes down to why is a person doing what they're doing.
Exactly.
Most of the time, it's family. Most of the time, is to pass down those skills to generations. That's what it's all about. So, and you've been in Forex how long now? You've been about a year now?
Last month made a year already. Yeah.
Okay.
March. Yeah. March made 1 year. And it's been an amazing journey. Lots of learning that I've learned. There's so many things, you just sponge everything, and then we both found out what works for us. And throughout the year, this is what we've come up with that we're about to share with you folks. So it's been a great honor, and like everything that you do, you work at it, you work hard, and I believe that this is something that will definitely benefit a lot of people.
Definitely. I agree. I definitely agree. And before we get into it, I have, got another question about Forex. So a lot of people get into Forex. And, a lot of people, they come in, very confident, but they end up leaving very soon. What is some things that people are missing when it comes to being successful with Forex? Some of the main downfalls.
I think marketing and training has a lot to do with it. You see a lot of, when you get into this, the marketing industry kind of drives people to Forex. You see all the big money shots, and in their people's minds, they're saying, yeah, I'm going to make that type of money. But when they get into it, it's a whole different world, because you can make a lot of money, but then you can blow your account at the same time. And people don't realize that it's a learning process. They think they're just going to come in and make money, and they don't take into consideration their account size, what they should be trading at. They just think of hit it quick, but it's not like that at all. It's a progress. It's a growing process, seeing what works for you, learning risk management, learning techniques to better yourself. And is just not something that you're going to come in overnight and just think you're going to be a millionaire. That's why I appreciate like your videos. You started with a small account and you grow it at 2% every day, and that's showing people exactly how it should be done, instead of coming here and just thinking they're going to make a whole money. And then once they blow their account and they start losing, psychologically, it throws them off.
That's right.
90% of trading is your mind and your emotions. Once you start to lose, it's a done deal, basically.
That's true. And I've been there, man. I've been in the spot when I first started. I was like, came in too confident, overconfident. And what's crazy, when you start to lose, when you don't have the discipline early on, you start to lose. What happens in that gambling mentality can creep in. You say, you know what, I'm gonna make my money back.
Exactly.
You're gonna try and chase it.
Trades. You start making all these emotional trades, and you lose. And I have so today, you get wiser as the days go on. So today, I have a 3 strikeout rule. If I strike out 3 times, with my stop losses, I'm done. Okay, pick it back up tomorrow. New fresh day, new mindset. Just pick it up. So 3 strikes with proper risk management, folks, is key, because depending on your account size, your risk management needs to be precise. If you want 1 to 2%, we say 2% because of the technology we're going to show you, and with a tight stop loss, you're not going to hurt yourself. Okay, but you got to be disciplined enough to walk away, and that's what I've learned now these days. Back then, I didn't walk away. I was like, man, it messes you up. So
yeah, exactly. Hey, I blew a couple accounts. I mean, and it's just like you said, that gambling mindset. It's like, okay, I'm gonna get in. I lose. I said, no, I'll get it back. I'll go a higher lot size.
yeah.
And then I lose that one, and I just keep going. But as you learn the process, and that's why people get turned off by Forex. That's exactly the downfall. But if they start from the beginning, which new people, that's how they learn, by blowing their account. And I'm sure all of us did this, right? Once you blow your account, then you become, okay, I need to take this
seriously,
and I need to learn. So
we have a technology, folks, that we're going to show you now. That, first of all, it is a technology. It's an indicator. There's a ton of indicators out there. I've used them. I use a couple of indicators right now, but this is one of my main arsenals for the trading game. It gives you, if you follow all the rules that these gentlemen are going to show you, then your trades are going to be a high probable trade, which means more than likely you're going to win. Okay, and if you follow the rules, first of all, you got to be patient, and third of all, you got to be disciplined. Okay, you got to be patient, you got to be disciplined. This is the emotional part of trading. So without further ado, guys, we want to introduce to you the Wave Tech indicator. And who's the creator of this?
Basically, it's just a style that me, Reggie, and another guy, a partner of ours, James, kind of took to throughout the course of our learning. And one of the ways, and when you start, there's so much different styles of trading. And I think that's a downfall as well, because people try to learn everybody's style of trading. They try to combine it together, and they just conflict against each other. So for me, I think 7 to 8 months in, I totally switched my whole style of trading. And I switched it to a tighter stop loss with what we've learned over the past year. And that's what we incorporated. So me, Reggie, and James kind of came together and put this together in the beginning, it was just for our team and people that, wanted to learn. But we see newbies that came in, and they're just having success with it. And it's happy to see a new person come in, and, even though they make $5-10 a day, I'm happy, because online, a lot of people don't make $5-10 a day.
That's right.
And if you can do it from your phone or hop on an hour a night and just compound that's significant money.
It adds up, bro. It adds up big time. I mean, everybody's style is different. Like you said, I'm a scalp trader. Okay. As soon as I see blue, I'm pushing.
Closing.
If it's 1% or above, I'm hitting that close button. I'm good. Give me my 1%, 2% a day. I'm done.
Done. Yep.
That's all I need. And a lot of times, it goes higher than that. But just when people can see that, when they can see a consistency of that, it does wonders. It builds your confidence, and the actual indicator can help do that. And so Michael, you want to share your screen first, man, and show us, kind of give us a rundown of the indicator, and then we'll move to Reggie and we'll talk about
You know what?
all that.
Reggie is a.
Reggie is the one.
Yeah, let's go to Reggie. Reggie's.
It's all on you, brother. You see that share button?
Yeah, I got that share button. I'm going to share right now.
All right.
All right. Can you guys see my screen?
Yes, sir. We see it. Let me
okay. Cool.
Keep going, because I'm going to go on Facebook and see how everyone is doing on the tuning.
Yeah.
If anyone has any questions at all.
So before we start, I just kind of wanted to elaborate on what Micah and Ontarian was saying, was how, we when we start, we want to look for the holy grail. We're looking for a holy grail and a strategy that works. And I'm going to tell you the cold hard truth. There is no holy grail. So we can stop searching for that, because it ultimately comes down to how you want to trade and how you want to go about trading the market. And, quite frankly, as someone enters trading, or they start to trade any kind of currency or stock or whatever it may be, I've told this to multiple people, but they ultimately decide, it really showcases someone's true personality. Looking at this chart right here, it's time and time again. It's really gonna show someone's true colors. Looking at charts, how if they're patient, that's just what it does to people. It brings out the best, and sometimes it might bring out the worst. But based on the criteria and our psychology and how we wanted to produce this indicator that I'm about to showcase to you folks, is we wanted it to be at a glance. Like, you can come onto the chart, you can see just with one look what price is doing, and you'll automatically know whether you're looking to sell or buy. That's what we wanted to do. And we've created an indicator called WaveTech Exhaustion. So what it does here is, on the bottom of my screen, as you can see, this area is the indicator. It's the exhaustion indicator. And what it does is it pulls data from multiple different time frames of the market, whether it be Forex, stocks, commodities, metals, you name it, crypto. They all pull the same kind of information, and they measure the time periods between all the time frames. And when converged at the top or on the bottom, it's a high probability trade to either enter a sell or a buy. So if you can see, this right here is Euro CAD. It's the Euro Canadian. Okay. And this was a trade we pulled out last week. So we give 4-hour exhaustion trades. So this is a 4-hour chart. We use the 4-hour because it ultimately gives you a good perspective of what the market is doing. And this trade was called out on the 19th. So you can see here, if you look at my crosshairs on the vertical, you can see the March 19th, which was a couple of weeks ago, exactly. So we let them know that this here is exhausted. So once it's exhausted up here, there's really no other place to go but down. That's just how our indicator works. And that's ultimately how the structure of market works. And before entering the trade, that's what we do. We go through our criteria. We identify 4-hour exhaustion periods. So I'm going to take my vertical line tool here, and I'm going to highlight this area right there. And I'm going to do the same thing on the bottom, so we're all in alignment. Now we utilize the 4-hour, the 30-minute, and the 15-minute time frames because they all come in alignment with each other and they all tell the same story. So as soon as we identify that 4-hour period was exhausted, we then enter a smaller time frame. So the 30-minute, excuse me. Now we're gonna go back, drag our screen here, and identify. So this line here is gonna pop up, and it was formed on the 4-hour, but when you drop down to the 30-minute, it's gonna show you that same exact place you put it at. We drop down to the 30-minute. It's exhausted at the top, so we know we're looking for sales. Now you can see at that moment that the pink line right here was not exhausted yet. So we drop down to the 30-minute chart or the 15, it's your preference, and we would wait. We'd wait until they all converged at the top again, as they did right here, right? So I'm going to draw another line so you folks can see. Delete this here, exactly where that area is. Clear up my screen here. So you can see now we've got full exhaustion. All right, folks. Now this trade is ready to go. And we've got some criteria on how we would enter this trade. So let me grab my notes real quick. Notes is somewhere over here. Okay, cool. Okay, back to our 30-minute chart. So here's our criteria, right? Here's our pre-entry criteria. Right? Not only do you get the exhaustion indicator, but I'm about to put another indicator that works in confluence or works well together. All right, I'm going to put up, this one is called our WaveTech current. And as you can see, just a couple of vocabulary words you're going to learn right now. It's an SMA. So SMA is a small moving average. This is the smaller one here, hence the reason, small moving average. And guess what? This one is called the BMA, or the bigger moving average. Okay, these are going to help you identify and pinpoint entries on how you would enter the market. So some of our trading criteria is real simple, right? And it's subjective, so that we're not chasing the trade. We're just simply waiting for price to come to you. So as you see here, we got three types of entries we can do. We can either enter aggressive, moderate, or conservative. Now, if we were to enter an aggressive trade, this is how you would do it. Now we wait for exhaustion, all right? We wait for the 30-minute, the 4-hour was somewhere around here. It wasn't quite ready, so we'd be waiting until it all peaks up at the top. Now we're gonna look to sell. And if you wanna enter an aggressive kind of style, you would look for a bearish engulfing. A bearish means, a red candle. In my case, it's red. For you, it could be a different color, but I like you to use the green as price is going up and red when price comes down. So each candle is 30 minutes long. And what we would do is we would wait for it to form a bearish engulfing, meaning that the candle is bigger than the candle before it. So you can see here, we got a bearish engulfing candle right here. That would indicate an aggressive trade. So I'm going to put a line right here. So that's the aggressive, okay? Moderate would be the second kind of entry, and it will be a candle that closes below the SMA. So you can see, let me go ahead and replay for you real quick. So I'm in replay mode. It's just gonna go ahead and play out how the market played, wherever you wanna start from. So let's just see, so you guys can see, okay, as market's going, that would be our aggressive entry there as soon as that candle closed. Now you're gonna be looking for a moderate entry, which is right there. So a moderate entry is when you would have to wait until the candle closes below the SMA, or the small moving average, okay? So that would be our second entry. Sorry, not second entry, but our second type of entry would be a moderate. This is my favorite. I just would like more confirmation. I know this is Ontarian's favorite way to enter the trade as well, but this gives me a little bit more confidence entering the trade off of an exhaustion point. So that would be the moderate. And I don't know if you can see, but the SMA also flipped red. So in that indicator, as well as the BMA, we've pulled data from different time frames to help you. Once that indicator turns red, it'll give you confidence entering the trade. So I'll jump down to a line graph. So in that line graph, you can see there it turned red, all right? So as soon as that candle closed below, that SMA turned red, I would enter a sell right at that point. Now, we'd like to use a 10 pip stop loss. All right, we put 2% in a 10 pip stop loss, and therefore every time your trade goes 10 pips in your favor, you gain a 2% return on your investment. Okay, we're gonna go ahead and dive into risk management a little later, but for now, let's move on to the next kind of entry, which will be a conservative entry. It's when the small moving average crosses over the big moving average. We'll play out the market here for you. So price is going, all right, it's going. Okay, right around here. So I forgot to incorporate that on the conservative. You can wait until price closes below the BMA and or when the SMA crosses over. And you can see there's a big pip difference between all these three types of entries. Again, it's just how, it's your risk, and it's ultimately how much you want to risk and how you want to enter the market. This is just a basic foundation that we give our traders to enter the market. And that would be the conservative entry. Okay, so that's the three types of entries. This one here is aggressive. This is a moderate. And here is a conservative. Now, let's just go from our aggressive entry or moderate entry, because that's what I like to use. So you can see from here all the way down here already, we've already got 42 pips in profit. This is a EuroCAD. This is the trades that we were all in 2 weeks ago that we gave out. So you can see as you're getting all of these confirmations, this is the entry and how we would enter our trade based on this criteria right here. It's pretty it's straightforward. It's simple. Is there anything else, Micah, that you want to incorporate, or is there any questions that we want to say that you got for me right now, Ontarian or Micah?
See if we have any questions on
the Facebook.
Yeah.
Okay.
Yeah. If anyone has any questions about this, folks, just leave a comment, and we will accommodate you.
All right. So
my question is, so a new person, a very green person who's new to Forex, they can benefit from this tool, right? They don't have to be an expert to benefit from this tool. And how would they go about being successful with it?
All right, Michael, you want to answer that?
I'd say, for a new person, we have a few new people that has been beta testing with us. I know there's Reggie's aunt who's been with him trading for about 3 months.
Yeah.
So far, and she just knows the basics of Forex. She really didn't go in depth, and she's been, finding consistent profits. I know she sends screenshots to Reggie all day. Every day she profits. And there's another guy you probably know who's in the group as well, Ontarian. His name is Lamar. Lamar has been with me for, I think, about 8 months, but he's really never studied Forex in that time because he works so much. And last week, I believe, he went 19 for 20 trades following these criterias and using this tool. And so he only knows basics as well. He didn't dive into it like we do. But to me, that's amazing because you can take somebody, just show them the basics. And when they're growing, you don't want to complicate things, especially when they're new. I know you got trend lines, support resistance, Fibonacci's, pitchforks, which is our favorite. But if you can keep it simple for them, it gives them that excitement. Hey, what if I dig more into it? Because once you dig more into it, you can use this tool, in so many different ways. You can catch the retracements, you can catch reversals, you can catch the whole move of trends, but it's just so much things you can do. But as for a new person, it works for a new person.
Wonderful. Okay, so that gives a lot of good confidence for the new people and also for those who've been, in the game for a while but haven't had a lot of success. This is I see this tool as a confidence builder.
Mm-hmm.
You have these criteria, these trading criteria, and like Reggie said, my favorite entry is when that price goes closes under the 13 SMA. Game on after that, because I'm in that trade, and that trade usually tends to go in that direction for at least 1%, the 1% that I look for, but a lot of times more than that. So it's very, it's very accurate, this tool.
Yeah, and you know what? Like you talked about giving confidence.
Mm-hmm.
You have that saying, the fear of missing out on trades. These things give you trades all day, and if you just follow the criteria of what is taught, you'll have more wins than losses. And like Reggie said, it's subjective. If it don't meet the criteria, don't trade. Keep yourself out of bad trades.
Yep, that's the biggie right there. That's the biggie. Don't try to also letting the market come to you, which is absolute key. Not trying to rush the market, but letting it come to you is that's a big deal.
Mm-hmm.
Big deal as well. So talk a little bit about the percentage of risk again. So if a person has, say, a $500 account, percent risk, what does that mean technically in numbers?
Hey, Reg, you want to show that calculator since you
Yeah, let me go see if James tidied up the website real quick. Might be doing some changes real quick, so it might not be loading, but I think he could be making some changes. Do you have an extra calculator on your homepage, Michael?
Yes, I believe I do. You know what? Let me.
Yeah, we're gonna talk about risk and let me see. Let me see if it logs in. Brought me to the login page, so let's see if it goes.
And I'm gonna check and see if anyone has any questions here.
All right.
Here. Let's see. All right.
Yeah, the web page is not loading. I think James must be doing some finishing touches on that end. Let me see. See, maybe Michael can pull up a calculator. But before we jump into the risk, let me continue real quick. This was pre-entry, right? We just did pre-entry, so now we entered the trade. Now post-entry. Now, so probably people are wondering, okay, so now what do we do now we enter the trade? How can we utilize this indicator better to help us stay in the trades? So once price has gone, 20 pips or so, we like to ride the SMA. So the SMA is currently red. You can have confidence staying in this trade until this turns green. So it's going to pull data. Once that SMA turns green, you'd probably want to start looking at either exiting the trade or start taking profits. We technically don't have a take profit area set. What we do is our take profit is actually our stop loss, or we call it the stop profit.
Okay.
When the 4-hour is exhausted, we don't know exactly how long that will play before making another. Well, we do know based on, we can jump onto the 4-hour chart and you can see that it's exhausted. So we can stay in this trade all the way until all of these indicators here, the yellow, the pink, and the blue, have come down into this green area. So once it's down there, now you're gonna start, considering that it's gonna make either a bigger move back to the upside, right?
Okay. Now,
So 30 minutes.
A person can stay in that trade. They don't have to close out. They can just stay in there if the trade plays out that way to exhaustion to exhaustion.
Exhaustion to exhaustion on a bigger time frame. So, for those who like to hold trades, for an X amount of time, using that 4 hour indicator, trade from exhaustion to exhaustion, because we can go down to the charts and you can see it happens time and time again. 4 hour exhaustion up at the top, 4 hour exhaustion on the bottom, and it just goes up and down. And you can trade in between that on a smaller time frame. Okay. So you can see that once price came down all the way here, once it came back up here, this candle closed. As soon as this candle closed here, that green SMA line, that line turned green, indicating retracement was gonna start happening. So you can start looking to close trades by then, or even just close the whole trade out. From a moderate entry all the way to where it flipped, you've already bagged 160 pips.
Wow.
Already, before it turned green.
That's powerful.
So, yes, we did have retracements up here, but it still stayed red. We had one more here, it still stayed red. It didn't flip initially until the candle, as you can see, closed above price, above the SMA. So that's how we use the SMA and the BMA to stay in the trades.
Hey, Rez, can you calculate the stop loss of all the different trades, how we use a 10 pip stop loss, and see the pullbacks? I pulled the calculator up. So I just wanted you to touch on how far it pulls back usually when we get into these trades.
Yeah, so if you folks want to get a little more technical, for those who have some experience in trading, once the pink line here leaves this exhaustion point and it gets to the bottom, you're gonna start looking for a retracement or a pullback, okay? And it did that exactly here. I'm gonna line it up with my vertical line, and as soon as it got to the bottom here, it pulled back. So you wanna see how many pips is that, Michael?
No, the stop loss from the entries, the different entries.
Oh yeah.
How much pips it went back, because we set a 10 pip stop loss. Sometimes it don't even go back 5 pips.
Oh, so let me go down. So this was our entry here on the aggressive side. So from the entry, price pulled back. Oh, let me get my magnet off. So from the entry, price pulled back 5 pips. That's it. 4.8 before continuing.
And the next entry?
And on the moderate entry, price pulled back 7.2, 7.4.
So about 10 pips is a good stop loss to use.
For a 30 or 15-minute chart.
15-minute chart when exhaustion happens.
Right.
So I got the calculator up.
Okay, let me go ahead and stop share. All right.
Okay, there we go. Can you guys see it?
Oh yeah.
We're good.
Okay, so when you start out trading and signals that you get, a lot of people, they trade anywhere from a 30 to 50 pip stop loss. And the reason why they trade a 30 to 50 pip stop loss is they're giving you a zone on when the trade might trigger. It might trigger at entry. It might draw back 15, 20 pips before it makes its move. But the power of this indicator is if you follow the criteria, the moves are ready to be made. So we like to use a 10 pip stop loss. And with somebody starting with a small account, and the calculator that we have on our website, let me show you the difference. Let's start with let's just go 40 pip stop loss. Okay, off a $500 account, you can start trading at 0.03.
It's a lot size, yeah.
That's your lot size. Now, 0.03, the projected take profit would be 50 pips. Now, from that 50 pips, let me see the rate of return. Off of 0.03.
Remaining balance.
So you're risking 2%, which is $10 in the trade, right? If you lose the trade, you lose $10 off a 40 pip stop loss. Potential gain, if it goes 15 pips in your direction, it's $13. So 2% into a 40 pip stop loss is risking $10 with the potential gain of 13. Now, let me switch this to a 10 pip stop loss. And when you calculate it into a 10 pip stop loss, now you're trading at 0.10 lot size. Your potential risk is the exact same thing, $10 as the 40 pip stop loss. But your potential gain is $50. That's like 4 times.
Wow.
Trading. And the way you can do this is off the exhaustion points, knowing when the market's going to turn, following that criteria. And this is why I fell in love with this style of trading, because, you know, when people come in and, you know, it's a little discouraging. You know, a lot of people start with $500, they're trading at 0.03, and, you know, they're like, oh, I only made this much, but he's making this much. And, you know, it kind of throws that emotional factor into the game. Right. But when you can pinpoint the exact turnaround of the market, you can up your lot size, same amount of risk, but you'll make 4 to 5 times more than the other traders.
With a 50, 60, you know, stop loss size.
Yes. So that's the power of this, and this is the calculator that we use. But like Reggie said, every 10 pips, you're making 2% as well in the trade. And I like it too, because if we lose a trade, we lose 10 pips. Somebody who loses a trade at 40 pips, well, now they gotta make 40 pips to make up for their trade. But with this style, I only got to make up 10 pips. That's a big difference.
And I like this. I like the tight stop loss because your risk to reward ratio is
greater.
It's a lot greater. It's a lot greater than that 40 pips, you know. Right. And it's easier to recover. So I mean, if you're a scalper, right, and you know that emotional factor gets into it, and you keep moving your stop loss and you lose 40 pips, well, now you'll have to get 4 trades and make 10 pip profit in 4 trades in order to break even. Right. But with this style, you only need 1 trade to go in 10 pips and you break even.
Yeah, so with this account size of $500, you're risking 2% into 10 pips. Your projected, you know, take profit is, let's say, 50 pips. You've already made, you know, as we compound, you know, we like to gain our 2%, which is just 10 pips a day. But with 50 pips, you've already turned that small account 10% already with $50 gain. Yeah, which no way you can do with a 40, 50 pip stop loss using the same risk, 2%. It's just, now, when you've made that 50 pips, using that 50 pip stop loss, you've just gained 2%. That's it, because you've risked the same amount. Trader A,
regular trading style.
Regular trading style. So
yeah, that's dynamic, man. That is dynamic. And, so what I know every week to make it even easier for people who decide to use this, there's projected exhaustion periods that you guys forecast. There's a forecast of zones to look for and exhaustion periods that you call out a couple of days before the trade.
Yeah, I think Reggie actually cuts the video on Friday.
Friday, when market closes.
When the market closes, he'll go through and look for the exhaustion points, and it's usually posted by Sunday to get you ready for the opening of the market. And also on Monday at 10 o'clock, people who don't understand exhaustion will be doing a Zoom every Monday in case they're looking at the exhaustion, they don't know what they're looking at. Well, they can hop on with us every Monday, beginning of the week, and for like a Q&A on how to enter the trades. And, we just want to see everybody benefit from this.
Okay. Good to know. I know you guys had one last night. I'll be tuning in to those as well. Yeah, I can honestly say, folks, that this past video that was cut, forecasting the exhaustion periods. I mean, we all benefited from that. I mean, we have a Telegram group. Once you receive this tool or decide to get the tool, you're going to get inside of our Telegram group, and you're going to be able to see, what we're looking at, the trades we're taking, the profit. Everything is there. We're transparent, and we just want everybody to win. That's what it's all about. We want everybody to have a successful trading career. And this tool makes it absolutely possible with the highest potential. For sure. So, yeah, guys, I mean, I really appreciate you coming on. Reggie, I appreciate you, man. Micah. You guys got anything else about the wave tech that people would need to know, or just follow all the rules and just go with that?
Follow the rules. If the trades aren't there, don't take it.
Don't take it.
Yeah.
Don't take it.
Don't take it. And again, it works for all different kinds of
Bitcoin
market.
Oh, you didn't show like Bitcoin.
Oh, I didn't show Bitcoin yet. Maybe I should.
Oh yeah. We can
okay, let me show Bitcoin. Now
I'm gonna see if we have any questions here real quick.
Yeah. So here's a Bitcoin chart, right? And as it went up, it was making higher highs, but we could see exactly exhaustion points for Bitcoin. Supposedly, this is the untradeable market, and we don't know when to enter trades. But you can see here, it's exhausted on the 4-hour, right? It had this huge drop, okay? Pink and the yellow are there. It retraced. And ultimately, we're looking for exhaustion to exhaustion. So here it is from this point here, exhausted at this point here. And then it made another lower low. But you can still see when the market decided to pull back up. This was back in December or February when it started really changing direction. And this is an area where you could have possibly entered again.
Nice.
See, exhaustion to exhaustion. And it works for all kinds of, any kind of market. You want to look at Apple? We all follow the same kind of criteria. Here's something that I mocked up a while ago. But you can see exhaustion points here. Exhaustion points here. Exhaustion point here. Here. Every kind of market you can think of. This indicator catches it all. So it's not a coincidence why things do, why the market moves the way it does. All we can do is just be ready for when it does move. And you'll know by using our indicator here, by trading exhaustion points on a higher time frame. So any kind of market, S&P 500, stock, commodity, Forex, cryptocurrency, it doesn't matter. We've built it to help target high probability trades. And we know that this will definitely help benefit traders across the market. Just
Yeah, no matter what they trade,
no matter what kind of
forex, stocks, crypto.
Nice, nice.
just want to give a little sneak peek on how else we can utilize this tool with the other markets. But
yeah, man, that's absolutely powerful. Absolutely powerful.
Yeah. All
Well, I
right.
appreciate you guys, man, for coming on and taking time out of your schedules.
Oh, thank you for having us.
Thank you for having us, bro.
Definitely, man, it's a pleasure. And folks, if you're interested in this wave tech tool, make sure you get back with us. If you have any questions, we'll be happy to get them answered for you. And until then, we don't have any more questions. I didn't see any on my Facebook on this video. We will talk to you folks later.
Alrighty.
All right.
Y'all have a good one.
Take care, guys.
All right, take care.